So maybe we can start with a quick introduction. Again, my name is Alan. I've been active on NFT investment for some time. I'm the MC. And, yeah.
My name is Amro Shihadah. I do a various amount of things. Started in sell-side M&A and have been in blockchain since 2013. Have ran a fund and have sold a couple companies and applied AI.
Hello everyone, my name is Sagar. I'm from Germany. I'm principal at BlockRocket. BlockRocket is fully regulated Web3 fund based out of Frankfurt. We do equity/token investment since 2019 and looking forward to the panel.
Hi, Matt Roszak. I'm co-founder and chairman of Block, and we are launching two companies here at NFT.NYC. One is Atmos, which is a play and earn metaverse for metaverse native sports. And the second one is Capsule NFT, which is, think of Capsule as Tupperware for your crypto. So you could put tokens, NFTs, et cetera, in this vehicle called a Capsule. And if you think about moving like an album or a chess drop in that regard. And I've been investing in this space since 2013.
So let's start with why NFTs?
Why NFTs? So I think NFTs are a great way to basically simplify what's being presented and create a lower barrier of entry for people to participate in what they like. I look at it as an easier way to create, seed or angel investing, but then you see the need for institutional funding to come in, and really hope that these companies realize that they are startups and they are working towards growth, and with that you need to involve more institutional funding and more institutional processes.
Want me to answer? Yeah. I think NFT is a really good value proposition. If you look at the creators economy and the street artists and everyone's the music industries as well is really congested and quite. If any new youngcomers wants to monetize their arts or music, it was really hard, and NFT gives them a new way to explore and go to their audience and community, and everyone can have their fractionalized, right? If you talk about sports or any other industry, so I think NFT is here to stay. But yeah, we are more bullish on in terms of monetization, how each individual can monetize their own product and reach out to individual how they can empower the community and interact more with them. And basically, if you are a collector, you would like to have piece of art as an NFT in your wallet, and you want to show it to your friends that look what I want. So yeah, we as a BlockRocket really bullish on NFT side, but we more focus on infrastructure play.
So the question was why NFTs, right? So I think for creators especially, it's such a game changer because you could monetize the work you do a lot better. You think about the models of Spotify or record labels, galleries in New York that buy stuff from starving artists, sell it at crazy money. No participation rights for creators, so creators get screwed. And so I love the economic model where creators participate at every juncture of that equation when you sell a piece of art. And so I think that's a real opener, and you see the economics here, what people make on YouTube or TikTok, et cetera, and then what some creators make selling NFTs, and we're just at the front end of that piece. And I did this TED Talk in 2017, the tokenization of things, and in there, if you kind of squint your eyes, you could see the dynamic around NFTs that I was trying to produce, which were these communities, whether you're a Bulls fan, a Kim Kardashian fan, or whatever, there will be groups of people that'll have these tokenized economies around these influencers, these celebrities, these brands, artwork, et cetera. And I actually mentioned this to Kim Kardashian. I give Kim her first Bitcoin. And I'm like, Kim, your community will have a token. Your community will have a market value. She didn't really understand it entirely, but we're seeing this now with a lot of teams. You have soccer teams and other teams doing this for their communities, starting off with NFTs. And so I think we're just on the front end of this phenomenon where communities get stronger, communities get rewarded for being early.
The participation and
exactly.
as a way to incentivize them to do more. Since this is a panel about institution and investment-wise, what are some of the things that you guys have back, either yourself or as a firm? Why do you guys chose to do that? You know.
Yeah, so I think just adding to Matt's point, I think the benefit is leveraging the communities, whether they exist in Web 2 or Web 3, and providing exposure to those who are in Web 2 without having to understand the nitty-gritty nuances, slang, terms there. So the idea is to operate just like the internet would, where you don't need to say, hey, I'm running on the internet. Hey, I'm running on the blockchain. Cool, that's good. That's what we want. We want you to understand and feel that you're running on the blockchain without having to understand that you need to be chain agnostic, that you need to provide this, that you need to follow regulation. So providing that exposure and entry point to Web 2 companies, big brands, high net worth individuals, athletes, while putting them alongside community-run organizations as well. If you think of it like a sports league, it's almost creating a franchise in each team. And then the exposure can be from as little as 5,000 people who use NFTs as almost a membership pass, or 100,000 or more. So now, if you're an NFT project, you can customize your character to be, a doodle fighting a Bored Ape, fighting a, very famous gaming company's character. So now you're getting exposure next to the Dallas Cowboys. Now you're getting exposure from Web 2 and Web 3 while creating recurring revenue for Web 3 so they can have valuations and fit the institutional funding framework. And in Web 2, now they get exposure to Web 3, which their communities now transfer from customer acquisition costs to customer acquisition revenue. So it really gets the best of both worlds without, dealing with a bunch of tokens and all sorts of things that complicate stuff.
Yeah, and so on the institutional side, what's interesting with NFTs, and I'm also a general partner of Sfermion, one of the largest NFT funds in crypto. It's a $100 million fund that we raised last fall. And what you're starting to see is verticals starting to develop within the NFT category. In crypto, you have DeFi, you have different segments that people are investing in. Similar situation is happening in the NFT world, where you're having funds or investment mandates that's just gaming assets, so shields, swords, etc. You're having real estate assets where there's the equivalent of a real estate company, but only in the metaverse. And so I think the verticalization is starting to come upon us now too.
So for the fund-wise, what vertical have you backed within the NFT space? Gaming, real estate?
So far, all of them, because it's so early, right? But you're starting to see lines being drawn in terms of real estate, and then developing on the real estate. Would you be comfortable
to name drop what specific vertical project, if you're comfortable?
Well, we just launched a gaming fund for Sfermion, so that's a specific vertical one for all the gaming assets. And then Tokens.com has a metaverse real estate push. So it's a public company that just started that strategy about a year ago.
So it sounds like real estate and gaming assets are still the main focuses. Is that a real way to say it? But yeah, sorry.
Yeah. I would also like to add something on institutional side, right? Everyone is talking about we need institutional, we need this and that. But the first question I ask myself is are we ready for it? The founders are ready for it. Because the biggest problem here is as a founder perspective, if you're building in NFT or in blockchain space, it's in bull market, founder's attitude is to the moonshot, right? It's how founders should talk with VCs. I think that's the start with the educating founders, right? So we really focus on founders' behavior. And coming back to your question, institutions, so what institutional guys are looking for, right? So they want to create yield. It's not their money. They are highly risk averse. So they are just a bunch of fund managers playing with the money of high net worth individual or some sovereign funds. And their job is to make more money by deploying money into early stage startups or where they find some opportunity. So of course, we need to first build whole infrastructure in terms of how you can monetize NFT in long term and sustainable. So if I say a few words about DeFi, average lifespan of DeFi fund is 180 days, right? So if you want to attract institutional funds, this is not going to work, right? Because they are also answerable to their LPs. So as an NFT founders, I would really, if you are NFT founders or if you're building in crypto space, so I think we just have to create that kind of attitude, how to, I'm not saying you should go behind institutional investors like sir and ma'am and give them respect. I'm saying have some sustainable, realistic approach and don't come up with moonshot valuation where you're asking for unrealizable numbers. I think if you're a true builder, doesn't matter you're building in NFT or like in DeFi or Metaverse, so and so. The really important thing is like you should be building behind the doors, not going everywhere and showing up and just trying to shield your product. So that's the main thing. And institutional, I think I'm by background, I'm an engineer, right? So I worked at some Web0 companies. And this is really interesting field I love personally because the institutional wants to follow Generation Z and millennials. And this is the first time happening ever I have seen in my experience that like 50-year-old guy is asking 18-year-old guy like how they can deploy their money, right? So this is truly an innovation in terms of like exciting space to work, but also we need lots of education and we have to educate this Generation Z. I'm myself as a millennial, so I'm talking about like Generation Z that have some kind of like systematic approach if you want to attract institutional fund for your startup.
Great, and we have a new panelist. Maybe a quick introduction about yourself and what are the NFT investments you or your firm had back so far?
Yeah, thank you. Sorry for joining late. It looks like our panel got moved up. I didn't get the memo, but great to be here. My name is Harish. I'm a product manager by the day at Meta, and I invest in Web2 and Web3 companies during the night. It's been most of my life is very non-traditional. In Web3, I started off as a retail investor and eventually kind of creating a fund through friends and family and kind of expanding myself. So it was mostly bootstrapped. And within the NFT space, I was fortunate enough to be a part of a couple of blue chip projects like Cool Cats. And yeah, this is definitely a winter, but yeah, that's a little bit brief about me.
We haven't actually talked much about PFP yet, so maybe you can talk about your view on these Cool Cats, these kind of collectibles.
Sure.
Something we haven't talked about.
Sure. I think, so obviously, nobody here is new to NFTs, but NFTs in general, most of what we're seeing right now is people are using NFTs as a funding vehicle, and it's kind of creating itself as its own asset class. And the way I see NFTs, it's just like crypto, people who've been here for longer than me, NFTs have really created an opportunity for you to be a part of something which was very traditional back in the day, like being a part of seed rounds or allowing retail investors to get a seat on the table. So, but however, that also creates a lot of friction and a lot of risk. And in that process, as we're seeing, NFTs itself, we're really looking at them as arts and collectibles, and there's a lot of FOMO. But there's a new stat that also I wanted to share here is apparently recently the census came out where there were more NFTs on OpenSea than there are web pages in the internet. So it's a paradox in general. We are living in the scarcity of abundance. So everybody's trying to get, there's only 10,000 of them, which is scarcity, but we have so many projects, which is abundance. So within that, I would say that NFTs are still going to a place where this winter is going to clean out some of that, and there are going to be some winners, but really, because this panel is about mainly investing, challenge always comes in finding those diamonds in the rough. And they're by no means I'm saying that one is just, it's a collectible, it's fame, Bored Ape Yacht Club, it obviously has its own bragging rights, but there's a lot of utility as well that's going to come over time. And the first cycle of NFT sales that happen, everybody are using it as a funding vehicle. So I had an idea, I'm gonna do a drop, get that money, and then figure out what I'm gonna do. And there are gonna be people who try, who fail, who just take your money and bounce, all kinds of stuff. And that's where the team and the community really matters. So,
all right, thank you.
Yeah.
Thank you. So right now, just to quickly summarize what we talked about so far, we talk about backing equity companies, backing founders that can run a business. We talk about some assets that are running more like a real estate gaming assets, these more hedge fund like NFT. We talk about collectibles. I think like we really don't have that much time. So I think maybe just somewhat on a high note, like what are some of the things you're most looking forward towards? Like, what do you want to see to be built in this NFT space? So maybe
yeah, sure. I think something that I'm really looking forward to, a lot of the blue chip projects also are in
What
in
is
the
a blue chip project for people
Well,
who don't understand?
All right, yeah, blue chip projects are the creme de la creme of the NFT space, for the lack of a better word. I think blue chip projects are everything that you've heard about synonymously with any NFT term. So Bored Ape, CryptoPunk, Cool Cats, almost everything that Yuga Labs has on their other side. So for now, it's a broad generalization.
Yuga Lab has metrics.
Yeah. But yeah, there are no specific metrics. There's no accurate definition of blue chip. It's a community-generated word.
Yeah, so what I'm looking for the most is actually, founders embracing something more like a high impact, low ego model, where they don't put their ego forward. They don't think that they can do everything. If you look at any startup, if you look at any company, you will find that 9 out of 10 that don't succeed have CEOs who only have vision and no ability to execute, don't put talented people around them, and don't facilitate that talent. So until we see that, and I think we are beginning to see that with some M&A activity, mergers and acquisitions kind of happening in this space, we need that consolidation so people can use that crowdfunding, use that liquidation event to then offset the costs that are involved with legal, professional services, growth, actually building frameworks that people can invest in. So when you're talking with a 50-year-old, he's speaking to an 18-year-old, they can use different terminology to describe things. They minted it, they sold it. These terms are, interchangeable. So as soon as we get that kind of out of the way, we're going to be able to connect generations that haven't spoken, never interacted. Communication's not going to be an issue, or lack of communication. And then I think we're really going to start to see some of these, formalized processes that people hate actually be embraced, and that's what's going to create the next catalyst of growth. And I'm really excited about that.
That's a good way to summarize, actually.
Thank you.
The high impact, low ego. I actually see all the best founders in the NFT space, they are like that. So, yeah.
Thanks.
So from our side, we started backing NFT projects back in 2020 when the COVID hit, right? So our portfolio startup like infrastructure provider, Wendley, doing great job, like a wallet provider, 2 million plus users. We backed like NFT as a ticketing service based out of Vienna. And recently we backed like one of the solid founder who is building like e-commerce metaverse platform. So basically what I'm looking for is like, if you are really a founder as a builder, wants to work behind the door day and night, and then also like we need a product. We don't want to invest in some hype-based. Yeah, I mean, we are looking for product which can sustain. It's fine. You cannot give us like return in next 2 years. It's totally fine. We have invested till last year only in equity deals, and which some of the portfolio startup did like 100 million plus like valuation in 1 year when they started with single-digit valuation in equity. But they were fine. They need money only for staying behind the door, build it, and they come up really strong outside after 2 years of like a pandemic, and they're doing totally good job. So we need product, of course. We are long on you. If we invest in you, then we don't want to pump and dump. We are there for you for next 5 to 7 years. So you guys can go to our website and see like we didn't took any exit. And so basically we are like a long-term VC with like a really thesis-driven approach where we are like a huge network in European ecosystem. So I'm here to talk about Europe. Like we want to put like Europe on a global stage in terms of blockchain. I know that Europe is lacking there, but yeah, we are trying hard. So you need a European market, then we are there for you. Then, and if you're ready to work with us, yeah, feel free to reach out to me.
Yeah, I think the blue chips in this space, building towards a successful NFT project is hard because on one hand, you could sell an NFT, raise some money, but then the work starts in terms of how you build that community. Sometimes if you're building a gaming ecosystem, you need to understand token economics properly and DeFi and how you manage token sinks and all these things. So I think doing well in this space requires more sophistication because all the kind of muscle groups you need to develop to have a successful NFT project, you need to develop those. And then two, what's interesting that I'm seeing is existing projects that have communities. So think of like ones that have communities and then ones that don't have communities. Ones that do have communities, think of like Wall Street Bets coming into the ecosystem and doing kind of NFT-based, token, DeFi, community-based stuff, right? And then you think of net new projects that don't have any community but have some of the interesting tooling and centers of gravity around it, then they're trying to build that community. I think the common denominator between both of those is that this NFT tooling of how a DAO is managed and what tools they use to keep that community engaged is very important. One of the things that you see out of the gate is there's a lot of, everybody buys the NFT, participates in the Discord, and then falls off if you don't continue to feed that beast and that community more stuff. And I think that pacing and that whole thing is, again, another muscle group that these teams need to develop.
So we got like a few minutes left. If you have one more thing to say to the audience, what do you guys want to say?
The one thing I'll say is just newsflash: we are in a crypto winter, right? And a lot of folks in this room and at this conference have not been through a cycle. I've been through 3, maybe 4 of these now, and the only thing that my muscle memory kicks in and says is build more. This is the time to kind of hunker down and build. Because these dynamics go in these cycles of 12, 24 months, which means you have to be careful about your cash burn and your spend, and you got to come out the other end with something meaningful. And so, while in the last year money has been plentiful for NFT projects, almost too plentiful, but then you go back in history and you say like, well, how much money did it cost to build all the railroads in the U.S. or the telephony system or the internet? We spent a lot more to get to what we needed, but that effervescence, that innovation is what we need to build out this next generation of where NFTs are going. So
Agreed. Bear market is the best time to win, really.
Yeah, I mean, I would like to add here, like, the crisis is the best time to build, innovate the new product. If we look specifically in crypto space, Chainlink or Polygon and other bunch of other fundamental-based strong projects want like a build-in bull market, right? They build throughout the last bear market, and that's also going to happen same in this crypto winter, whatever, like 18 months, 20 months. This time we have like couple like a blockchain space with like also legacy financial market. So yeah, maybe it can go longer, but I'm not sure. I'm not economics, but yeah, crisis time is the best time to build your product and come out stronger in the next cycle.
Agree.
Plus one to that, I think this kind of goes back to a famous Warren Buffett quote. So hey, like,
Be fearful.
when everybody's, the fear-greed index, when everybody's buying, be careful, be skeptical, but when nobody's buying, that's the best time. Obviously, it comes with a certain set of risks. So
Be fearful when others are greedy, be greedy when others are fearful.
Exactly, that's true, yeah, well said. So yeah, I think from, in retail, I started off as a retail investor, still am a very huge retail investor, but one thing that really, it's a very simple principle in terms of investment, is just figuring out, survive. How can we survive through bears, bulls? It's very common terms that you keep hearing. Don't put in money that you can't afford to lose, and stop looking at the value of your assets, because that always kind of freaks you out. And yeah, it's definitely the mood has changed since we started, since NFT.NYC was announced, and now it's in a great. But I think this is the best time to actually meet, because, as you said, we're in a build mode.
Yeah, but look at the audience here. I don't see there's like
absolutely, yeah,
is change, right?
Full room.
Absolutely.
Yeah.
Well, the beauty is also now we're not going to be focused. So there's, as everybody here knows, in 2021, I mean, just looking at OpenSea's, valuation at their market cap at $13 billion. A lot of money has flown through the space. So the money's here. Now it's just about using it appropriately. So I think, if we're talking about a crypto winter, if we're talking about these things, I'm not sure those terms should be used the same. I've been through a bunch. It's not fun, speaking to people, but it's a lot more gets done. And so what I would say is like now we have a chance to focus on quality, not quantity. So before people were shoveling things out the door because the market was so hot, let's just get it out, whatever. Now everyone, including the investor side, need to focus on the quality of what's being presented, not just the quantity, not just that it will sell, but like, what is the sustainability? Does it have DeFi protocols? Does it have monetization? What are the different activations and how? Who is this? Who is the target audience? We need to just start thinking more broadly and more specific towards growth and less towards near-term gain, because as we know, the job starts when you get funding and not when you don't go on vacation right after you close a round.
Be more long-term. Yeah. I got one more thing to add. I think NFT space is constantly evolving. What we think is a good investment is always our expectations always being exceeded. So welcome any of you want to do a exceed our expectation, because yeah. All right, thank you all for today, and yeah, give them a round of applause.
Thank you.
Thank you, guys.